good morning, everyone, and welcome to Fiduciary Friday at Alpha Pension Group. It is Friday, December 18th, and with me is Rob Milas, our Chief Investment Officer, and Mark Salamone, our lead consultant. So before we get started this morning, I actually want to give a special thank you to Randy Barth at Hans Wee. So Randy is the one behind the camera that makes us look good every week. Fiduciary Friday was born out of the early weeks of the COVID crisis when we all started working from home. We had a lot of good ideas, a lot of energy. Probably a hard group to manage, but Randy took us in, organized us, and made us look great. And he's with us every week, and I can't thank you enough, Randy. So thanks for your hard work. Again, Randy Barth at Hans Wee, from the heart is what his company stands for, and I think and I hope that that comes through in our videos. So Rob, I'm going to turn it over to you to talk about the market. You did it once again with an animal, this year a reindeer, which is appropriate. So take it away.
Yeah, we have Rudolph bringing us into Christmas as we also wrap up Hanukkah here. And as also we introduced Tesla into the S&P 500 today. So all exciting news. But we're looking at the markets, kind of what's old is what's new. Consumer, cyclicals, basic materials really are leading the charge, and energy continues to get crushed both this week and obviously year to date. The markets continue this positive tone in that, we had three of the major indices hit their all-time highs yesterday at the close. So that's the NASDAQ, which is the technology-laden index, the S&P 500, which represents the large companies, and then the Russell 2000, which represents the small companies. So I guess this is one way of saying that, we're finally at a point where, all of the indices are kind of hitting their stride all together. Whereas we used to, throughout the year, we have been seeing a lot of headlines around the large companies, but certainly the small companies are starting to perform as well. So I'm showing a chart here of just kind of what has happened to interest rates over the last several years, and you can see that we're near zero. So there's not a lot more powder to go in terms of going below zero. So the assumption that those stay low, might be the one leg of the stool that you might want to think about in terms of, being cautious.
Sounds good, Rob. And actually, you said something that was very important that I don't want to be overlooked, is that some of those smaller companies are starting to perform. As we know, this has sort of been a funny year, and those larger companies have really pulled along the stock market. So if we can get some other companies to collaborate and also provide some positive activity, that would be great. So speaking of positive activity, I'm going to talk about companies turning back on their 401k matches. So there was two different studies, one by T. Rowe Price and one by Census, which is a large record keeper. T. Rowe Price said that 9% of their companies that they work with stopped their match in early 2020. But the good news is about a third of those have turned the match back on already. So it's been less than a year that they've turned their match on. Obviously, the match got turned off at the beginning of the COVID crisis. A Census study shows that 21% of their clients, so more than double, turned their match off. But still good news here. Already 2/3 of those companies have turned their match on. So the 9% of the 21% to begin with are really good numbers. I mean, normally when we see an economic crisis, the majority of companies stop their matches. So it was a really good trend to see that that didn't happen. And I think the reason why is that people realize that retirement is something you need to focus on even in the bad times, and the cost of potentially shutting off a match and not helping employees, it's really even more costly down the road. So there's a cost to match, but the cost not to match is greater. So really good news there from 2020, silver lining, if you will. So I'm going to turn it over to Mark to talk about COVID-related distributions, which was part of the CARES Act, which was in April of this year as a result of the COVID crisis.
And one topic we've been talking about with our clients throughout the meetings over the past month or so have been preparing their participants for dealing with the taxes that have been related to coronavirus distributions. So those were related to the CARES Act back in April, as Rich mentioned. The CARES Act did a lot of things. One of the great things it did was allow people to access money out of their 401k if they needed it. As a result of taking those distributions, now it's time to pay the taxes. The taxes can be spread over 3 years. So as an example, if you take out $30,000, you could spread the taxes $10,000 a year over 2020, 2021, and 2022. What also gets avoided is that under 59 and a half, under age 59 and a half, 10% penalty. So that's been eliminated as well.
Sounds good, Mark. So we're going to leave you with this, Mark. I'm going to actually ask you to keep here on for another second. So this is Christmas, one of your favorite holidays. You're a big, jolly guy. I know you enjoy that. So they asked me to ask you what your favorite Christmas movie is. Now, I didn't answer that question, not because I don't like the holiday. I just can't sit still enough to actually watch a movie. So I think I'd say something that wasn't all that intriguing. So what is your favorite Christmas movie?
Well, I know your favorite Christmas movie is Elf, and for a lot of reasons. You have a likeness to that character, which we all enjoy. But my favorite Christmas movie is the National Lampoon's Christmas Vacation. Chevy Chase is a riot.
Excellent. Well, enjoy your guilt-free eating this year, Mark. And for everybody else, have a great holiday season and Happy New Year. We thank you for listening in. I know many of you have really enjoyed these, and we've enjoyed doing them. Thanks again to Randy. Thanks to Tracy, who is also behind the camera and makes us look good. And Happy New Year. We'll see you in 2021.